First off, Happy New Year to all my loyal podcast listeners on the Wall Street for Main Street YouTube channel. In spite of YouTube censorship, it is almost to 30,000 YouTube channel subscribers. It's been incredibly hard. I think I've added at least 6,000 new subscribers in the last 18 months or so. It's been a lot of hard work. So I wish everyone a very happy New Year 2020, and may you have health above wealth and happiness. Health, wealth, and happiness. But health is more important than wealth, I would say. Okay, so let's talk about this story. In the last couple days, we got even more proof of massive scale bailouts in China. So this is China Beige Book. If you're not familiar with them, they're very well respected. They're boots on the ground in mainland China. They have a very expensive service that provides a lot of real-time tracking data for the real economy in China. Leland Miller, who is their CEO, he's on Real Vision television frequently. He did an interview for them a few months ago, and it was released for free, I want to say in the last month or so. And he was talking about this, but we have more confirmation. Months ago, he was talking about this, that their data was that the Chinese banking system, the People's Bank of China, was bailing out with extra credit. They were subsidizing and doing bailouts of Chinese private businesses. So not just state-owned enterprises. And so this story that China Beige Book found in the last couple days, this is, as we've been reporting all year, a lot more credit support being provided than Beijing has openly been talking about. This is another bailout, the China Development Bank, which I thought the China Development Bank is supposed to be a BRICS bank. Thought it's supposed to be China's version of the IMF or World Bank, and it's supposed to make investments, I thought, to third world countries or emerging markets. Instead, they are doing bailouts to China. $100 billion yuan bailout to small businesses. And that's probably not the real number. It's probably more than that. I was speaking with my top China source who was running some of the math and for China's credit growth. And China's trying to keep the credit growth at double-digit percentage growth, so 10% or more credit growth. And he was running the numbers, and he was saying that he expects for 2020 that China will flood the credit spigots in their economy with around $4 trillion in new credit. And China's already having absolutely immense problems with the amount of credit in their economy already, especially the dollar-denominated debt. And there's been a New York Times story in the last couple weeks, let me see if I have the right one up here, talking about how this is the largest amount of credit growth in the last 10 years in world history. Their banking system is absolutely massive. Okay, here we go. Here's the part of the New York Times story. The New York Times story was, let me just read the title, and I'll put a link in the information in the description section. The article is from December 12th by Alexandra Stevenson. China's companies binged on debt. Now they can't pay the bill. Okay, so this was one of the article is very good, but there was some particular paragraph that was very interesting. The push in credit in China resulted in the largest credit expansion by any single country in terms of the size of its economy. The banking system more than quadrupled in size from 9 trillion at the end of 2008 to 40 trillion today. So it's an absolutely massive credit bubble. And there is a lot of defaults on debt in China, and a lot of the defaults are on dollar-denominated debt. So we've had recently in the last month some very high-profile companies go bankrupt in China, including a giant government-run state-owned enterprise trading firm and a conglomerate backed by China's most distinguished university are the latest to join a long list of Chinese businesses that have run short of cash when it was time to pay back their debts. And most of these debt problems in China are not in yuan debt, it's in dollar-denominated debt or dollar bonds. So that's where the choke point is in the system, and that's why the Chinese government, the People's Bank of China, the Chinese banking regulators, for the last 8 months have been telling Chinese private companies to not borrow in dollars anymore, because they already know they have a dollar-denominated debt problem. And they're using, according to some research, about 2/3 of their reserves, their foreign exchange reserves, 2/3 of that is used to deal with dollar-denominated debt in a very short amount of time. I forget the hedge fund research firm that was doing that. The charts in the Wall Street for Main Street Facebook group. There's a bunch of interesting China charts, and that's one of the most interesting, besides how much credit is needed. Over 7 units of credit now needed for 1 unit of GDP in China. The other interesting China story, and I'll attach a link in the information and description section if you want to read the China Development Bank story a little bit more. But the other interesting China story is, this just came out. It was also sent in the last couple days by my top China source. China's 45 trillion market is now opening up. Here's what to watch in 2020. China's Big Bang opening of its $45 trillion financial industry begins in earnest next year, a step-by-step affair that's unfolding just as economic strains threaten the promised windfall luring in global firms. Starting with its insurance and futures markets, the Communist Party-ruled nation will enact the most sweeping changes in decades to allow the likes of Goldman Sachs, JP Morgan, and BlackRock to expand their footprint in China and compete for a slice of its growing wealth. President Xi is seeking to cushion the world's number 2 economy against the steepest slowdown since the early 1990s. After crackdown on risky lending, I would say they really didn't crack down on risky lending. There was a temporary deleveraging where credit dropped below double digit. Now they said they can't have that, and now it's back up to crazy amounts of credit growth again. Listen to my Tony Nash interview. Absolutely excellent if you missed it from the last couple weeks. And a lot of the stuff we're discussing now on this that I'm discussing now on this podcast, we talked about, and he confirmed he's worked in Asia for 15 years now and extensively across mainland China, including being hired as a consultant for the Chinese government, warning them that Trump was going to put the tariffs on and they didn't listen to him. And he's been talking about how it's a matter of policy for jobs that China subsidizes and bailouts and does bailouts for factory owners. And now we're seeing more evidence of more bailouts, despite what many in the gold community and alternative media are saying. So this is the most interesting part of the article here. It says foreign financial firms may now plow around $1 trillion of assets onshore in the next few years, according to Wang Shifan, vice president at China Center for International Economic Exchanges and former mayor of Chongqing, said earlier this month. So this is an attempt by the Chinese government, if they're successful with this, and China has been doing this trick and trap method, this bait and switch method, using lure foreign investment with free trade zones, is they trick foreign investors to invest in the country, and then it's almost impossible for the foreign investors to get a lot of their money out, especially dollars. So Emma Mollman, props to Emma Mollman. I know she listens to a lot of these podcasts. She's been covering a lot of these stories now for the last couple years extensively, whether it's the Chinese government figuring out how to get state-owned enterprise Chinese bonds into global bond fund indexes. So American military pensioners and American retirees who are invested in global bond funds. And a lot of these global bond fund investors are U.S. military, retired U.S. military, and U.S. government employees. So they're funding the Chinese government indirectly and unknowingly, because a lot of that money that is raised by Chinese companies and Chinese state-owned enterprises ends up right back immediately into the coffers of the Chinese government. So it looks like this is an attempt with this article to trick another $1 trillion of global investment money into China to get more dollars in there and entrap it. So if you want to read more of the article, I will put that in the information and description section. The article is China's $45 trillion market is opening up for insurance and futures contracts. Hopefully people don't fall for that, but unfortunately I think even the World Bank and IMF loan Xinjiang money to build education camps, and I'm using air quotes, and American pension fund managers should be fired for this. Kyle Bass has talked about this. They should be fired for this, that they made investments for an extra return. They gave Xinjiang investment money. That's not doing custodial duties. That's not proper due diligence. So you can earn a little bit more return. You're investing in, let's say, very, very bad, very, very nefarious things. Also, she has installed now finance czars to avoid lurking, devastating debt bombs. So they're putting in economic czars and debt czars. That was a recent story that came out a couple days ago. And then China launches a stealth rate cut by switching benchmark lending rates, lowering funding costs. So they're trying to flood the economy with credit to delay any collapse. They're doing bailouts and subsidies and flooding their economy with credit. And all these governments are doing this. The U.S. government is doing similar tricks. There's problems funding the U.S. federal government deficit. There's no foreign investors who want to buy treasuries at this point, or it's a very tiny number, I would say, compared to the past. It's just funny hearing a lot of these experts talk about dollar collapse and all these other countries are banning dollars. If China's trying to collapse the dollar and ban the dollar and get rid of the dollar, then why have they borrowed so much in dollar-denominated debt, and why are they trying to get another $1 trillion worth of foreign direct investment into China for their insurance and futures markets? So these people who are saying that like foreigners are all dumping the dollar, foreigners are all abandoning the dollar, the behavior of the governments and these foreign entities does not match what the press releases are saying. Greg says China has tricked and then taken over many U.S. investments in China, or the companies that make the investments never get the profits. So in a case like Apple, Apple has gotten profits from cheaper manufacturing in China, but now Huawei has all the intellectual property from Apple, all their best products, from Samsung, from LG, from Sony. So Huawei has all this intellectual property, and that's why Huawei is so good right now, because they have all this IP and patents, and they didn't have to pay Apple or Samsung for them, or Google. They got free research and development. Tom says, TikTok, China. No, I think China can keep this game going for a while. They can keep really bad stagflation and taxing. Well, they're not taxing at the levels that the Western world is, at European Union and Japan and the US are. And the United Kingdom and Australia and Canada. China can keep this credit spigot going for a while. But you're going to see the gold community and the alternative media saying China's going to the gold-backed crypto, or the gold-traded note, or two combinations of currencies. There's going to be an internal currency and an external currency, which is basically what China's already been doing for the last 20 years. Ricky says, Wall Street sold out the U.S. to China for money, and now any U.S. president looks like the bad guy trying to fix the problems Wall Street and large corporations created. Exactly, Ricky. I will also add, Ricky, that the Democrats, who are supposed to be protecting unions and labor, also sold out to China. So the Democrats sold out a lot of jobs in the Rust Belt and a lot of union jobs, and that's why a lot of union members who normally only voted Democrat voted for Trump in 2016. And the Democrats are going to have a real problem trying to win back a lot of those union jobs, because Trump is at least trying to bring back some jobs. Now, I don't know how successful he's going to be, but he's at least trying. And again, I'm not in favor of the trade war and all the crazy stuff. Some of the stuff going on in this trade war is nuts. But if I was a union member, and I'm not, but if I was, and I saw that Trump was at least trying, that's why he won the votes that he did in Pennsylvania, Wisconsin, Michigan, and Ohio. Anthony asks, how will China use their new crypto to add liquidity? Well, the government may have a permanent backdoor in there, so they don't even have to print the money. Not that they were already voluntarily switching to a cashless society with QR codes, but now it's easier to just flood the market with digital yuan. They can move the yuan faster in the economy. The main reason, Anthony, for crypto yuan is for control. It's to integrate with cashless society. It's to integrate with social credit score. And supposedly social credit score is getting worse tomorrow. On January 1st, 2020, there's a lot more bad things coming with social credit score. Black Swan says he thinks China will implode when the whole world implodes. Daisy chain implosion. Yeah, it's anyone's guess what will collapse first at this point. Something will probably collapse in the next 12 to 24 months. My educated guess would be emerging markets or European banks first. But apparently Japanese banks also have a lot of problems. Yamui Mata asked, don't you think that the Chinese population will rebel against what? Rebel against crypto yuan? A lot of the Chinese population listens to whatever the government says. They're afraid. There's not a lot of public protests anymore. Most of the protests, from what I can gather in China now, are mostly about real estate prices. So if a real estate developer tries to lower the price of a condo after someone bought the units, then there's a protest. Or if there's a peer-to-peer lending scam and all this money, or a Ponzi scheme, investment scheme, and money is stolen, then there's a large protest outside. But then the Chinese government doesn't really do a lot to help the people that lost money in those schemes, and they just want to get rid of the protesters. Just, move them along. Not like get rid of them like the mafia. Yeah, normally those people don't end up in re-education camps, from what I've heard, but it's normally like the bookstore owner in Hong Kong, like that crazy. If you've heard of the spy tale of the bookstore owner in Hong Kong who had anti-Chinese government books. Website guy says we are repo bailing out banks under the table. Well, all these governments are. All these governments are. We're in end stages here. We're in the last couple innings. The European Union's doing massive amounts of QE with the European Central Bank. They're buying massive amounts of government bonds and corporate bonds. Negative interest rates are going to break their private sector. They're breaking a lot of different things. So I don't know how much longer negative interest rates can last in the European Union, because they're destroying a lot of things. The collateral damage is enormous. Japan has been doing bailouts for longer than anyone else, any of the other major countries. The US is doing bailouts with the repo. And China's obviously doing a lot of bailouts now with the factory owners and the small businesses. So the evidence is just mounting. All these bailouts are coming. The bailouts, I'm not hearing evidence of this. The emerging markets are not getting the bailouts. That's what I'm hearing. So I haven't seen a lot of these press releases or evidence that these emerging market private businesses and banks are getting the bailouts that the other banks and private businesses in the developed world are getting. So the emerging markets look to me to be getting the brunt of this, because China's slowing down. A lot of commodities are in bear markets. And emerging market companies over-leverage to commodities and to China. And China's economy is contracting pretty violently, in spite of the amount of credit that's being thrown at the Chinese economy. I mean, at a certain point, if you throw enough credit at something, it becomes saturated. So yes, the Chinese are increasing credit, or trying to. But if there's already a debt problem, throwing more credit at it's not going to fix much. I mean, it's going to keep some firms as zombie firms, but it's going to bankrupt other firms, or make them even more insolvent, or even worse of a zombie. The people that get stuck with the tab, this is part of stagflate and tax and lie. It's the people holding the fiat currencies. It's not just the dollar. Those are the people, the taxpayers, the people who save. Because the governments, to survive, a lot of these governments are doing financial repression. So it's the large corporations and the large governments that are benefiting from central banks manipulating interest rates lower. And then so savers and pension funds get hurt. Anyone holding the currencies long term, because they lie about the real inflation rate. So anyone holding the currencies long term gets screwed the most. If you're holding yen long term, you're not gonna be able. Your savings in real purchasing power are not gonna be that high. If you're holding Chinese yuan long term, your purchasing power is gonna be declining rapidly, and your savings in real terms are not gonna increase. Same thing with euros or dollars. All these currencies are sick. It's stagflate and tax and lie until the system collapses. And it's just gonna get even more dystopian, even more distorted. And that's why the stock market's doing so well. Well, that and share buybacks. we'll see when I can get that NASDAQ video out. I already have the chart work done. I have to record the audio and edit it. Okay, well, I think that's pretty much it for this short little video. I have a number of China stories if you actually want to dig in deep and read them. They will be in the information and description section. But 2019 was a very interesting year for me. The beginning part of the year was very, very hard. And the last 9 or 10 months have been progressively improving. So overall, I would say it was a good year. It was a lot of hard work, but the results are finally getting there. So I'm actually optimistic about the future for the first time in a long time. And that's in spite, well, not in spite, that's as well as gold and silver actually doing well. So my investments are doing well. So all around, fairly solid news, although I've had to work very, very hard for it to get up to these levels, thanks to YouTube censorship. So 2020 is going to be a very interesting year. Should be good for gold and silver. I don't know price predictions. We'll see. Eventually, gold will be at 2,000. I don't think it'll be at 2,000 in 2020. Maybe in a couple years. Maybe 3 years. I'm not going to be writing these hyperbolic articles though about how 2 years from now space travel is going to be asteroid mining is going to be a multi-trillion-dollar industry. I can't believe that. You're risking your reputation if you stick your neck out like that. And there's actually evidence on the internet that in 2 years you predicted that asteroid mining was going to be worth many trillions of dollars. I would never write an article like that. I have way too much self-respect for clickbait like that. Oh, thank you for the super chat, Greg. I appreciate it. 2020 will be very revealing for the masses, Isabella says. Unfortunately, Isabella, the polling for socialism keeps increasing in the U.S. So millennials, Generation Z, young adults in college, socialism is still growing in popularity according to the polls. So it looks like all the painful lessons, history repeats or rhymes in cycles. The book Fourth Turning from Neil Howe. I'm friends with Neil Howe. I've had lunch with him. He lives around me. So I've had lunch with him 5 or 6 times in the past. He even offered me a low-paying job a couple times, which I turned down, to write for him. But there's a lot of stuff in that book, Fourth Turning, that's very, very accurate, that history rhymes or repeats in cycles. And the very painful lessons of past generations that they had to learn about socialism and a lot of other problems in society, those lessons that were very, very painful for those past generations have been unlearned or forgotten by now future generations. Generations my age or younger who can vote. And that's why I've been saying that a lot of the mistakes of the 1920s and the 1930s are being repeated. You can see it. If you study history and how people acted back then, there was a youthful, young adults uprising with socialism back then. Very, very popular. So it's repeating almost exact. Now, obviously, we have better technology with social media, and people can get cancel culture or ostracized, or they can get blacklisted for one bad tweet or 2 bad tweets or something like that. But a lot of the same things in society that happened back then in the 1920s and 30s, and the mistakes by the central bankers and the central planners and governments, a lot of those same mistakes are being repeated. Yeah, so I am optimistic about 2020 for myself. Things are really improving here. I might have 300 Patreon account contributors in under 12 months. It's almost to 250 how things are growing pretty fast, so really good. My dozen or so monthly PayPal contributors, and people throw me a tip once in a while. It's much appreciated. Then I can focus on content, research, and analysis like this. So, bottom line, more evidence, more proof that China is doing bailouts. And they're not just bailing out their factory owners. Like I reported on starting a year ago that I heard from a source that lived in China for 3 months for her work and traveled all over negotiating with factory owners. And some of the stories I was hearing back from this source were nuts about the bailouts and the subsidies for factory owners and how the factory owners were still employing the workers and producing the same amount of goods, even though they couldn't sell them and the inventories were piling up, and the factory owners were told to keep producing by the bankers, that the loans wouldn't be called in. And Tony Nash confirmed this in the interview a couple weeks ago that I did with him, and he has absolutely extensive experience living and working in Asia and in mainland China for over a decade. Okay, well, apparently that's my phone going off for my New Year's Eve plans. So everyone have a great New Year's Eve and Happy New Year, and I will be back with more content in the near future.